What is up, guys? Welcome back to Trading with Prince, and this is Prince once again. Yeah, today I'm not going to be showing my face because of some crazy reasons, but yeah, first of all, I want to start by apologizing. I haven't been able to release videos for the past 2 weeks because fortunately I am in my final year in school, and we just resumed. It's been tough, but I know we're going to pull through. Okay, so today we're going to be talking about what market to trade. You don't just wake up in the morning and you go in front of your laptop and sit there till evening waiting for entries or something. You need to know your strategy, then you need to apply patience to your strategy. You need to let the market do what it has to do, then formulate what makes your strategy works, then you put your entry. You don't just wait and wait and wait and wait. You have other things to do with your life, I guess. So today I'm going to be talking about what markets you should trade. So one of the things I mentioned earlier was patience. You need to learn how to be patient to actually let the market do what it wants to do, because over here we follow the institutional trading and the ICT method over some time now, and this, I guess, this is a typical example. If you look at this, you find out that VIX 75 has been on a downtrend for, let's say, 2-3 weeks, I guess. So, but then basically, how do you enter this trend? How do you know that it's on a downtrend? Because you keep seeing lower lows, lower lows, lower lows, lower lows, lower lows. So what do you do if you want to enter this market? Basically, all you need to do is you identify your source or your breaker. That's the order block strategy, and we're going to talk about that in the next video to come. So if you're watching this video right now, anticipate the next video where we actually talk about order blocks and the sources and the breakers. So if you identify, for instance, now you want to enter this trade, you have to identify, sorry about that, guys. You have to identify, for instance, your breaker, or sorry, your source, because it's on a downtrend. Okay, let's use this as an instance. This is a downtrend. This is a down, and it actually looks like a very serious impulse move. And there was something responsible for this downtrend, and that is the last bullish candle. Oh my god, I think I just missed it. Okay, let's go back a little bit. This is the bullish candle responsible for this downtrend. You see it? This is the bullish candle responsible for this downtrend. So basically, all you do is you keep marking out your order blocks, keep marking them, keep marking them, you keep marking them. Like, okay, I really want to show you guys something here. Let's go a little bit lower. Okay, I think this is perfect. Give me a second, guys. Okay, see, now these are your lower lows. These are formulating your lower lows, lower lows, lower lows, lower lows, lower lows. Now, how do you enter the market? You enter the market at the retest of your source or the breaker. If you see all these yellow lines I'm marking out, these are my don't let this confuse you, but basically these are my my source and breaker identification. Now, where you enter the market is when the market comes, when the market comes and retests either your source or your breaker. But that's not really what I want to talk about today. I'm going to talk about that in the next video. What we're talking about today is to know the right market to trade. Okay, as I said, if you look at this market, it's been on a downtrend for a very long time. You could say, okay, fine, I don't really want to enter this downtrend because I don't know when it's going to stop. I'll wait for the uptrend to come. How do you know when the uptrend comes? The uptrend comes when you have the break of structure. Now, that is where you apply your knowledge of break of structure, because it's been on a downtrend for weeks, and now suddenly, just look at what happens. The market, this is before I had, let me put this. Imagine this place wasn't here, this whole place. Before, when the market was somewhere here, what I did was I put this line to notify me that, okay, fine, I start considering this market when the market passes this place. Now, that was my first step. There's also another place. It's just BOS, break of structure. It means that the market is going to do a reverse. You know, when you're driving and you reverse to maybe go back to where you're coming from or something, or take another position. Now, the market is done with the general bearish trend. It's now going up. So this is where I said, okay, fine, I'm going to start considering this market, because it depends on, if you keep trading, you actually become better, and you get to familiarize yourself with the charts. So this is the first place I put it, and if you notice, guys, it came down, then it started forming. Look at this. Formed higher high here, higher high here. It ranged a little bit. Some people are very good at trading ranging market, consolidation markets, but our strategy doesn't let us do that, because if you do this, you're going to flop. But some people are very good at that. So people that trade ranging market, this is a good opportunity for them to trade, you know, trade the ranging market, but that's not what we trade. So you just need to know what the market is doing. Then after ranging a while, the market started going up again. So what do we do with our strategy? We keep on identifying our breakers, anticipating that the market is going to come, go down, then shoot up again at any point. So guys, it's all about patience. This is where you now apply your patience skills, because you have to keep waiting and waiting until you get a retest. When you get a retest, you shoot up. Okay, this is a typical example of a retest. Let me delete this so you could see it. Look at this. Imagine this whole place wasn't here. This candle here, this bearish candle, is responsible for this little uptrend here. But realize that this little uptrend was broken again. So if you could use this as your breaker. Why? Because it came, we tested this candle at this level, and see what it did to you guys. Gave you guys an uptrend before it started ranging again. At this point, it's ranging again. So this is what I'm gonna do. Just do this and do this. This is just what I do for myself. You can actually do whatever you want to do, but these are things I do. So I would just leave this market, and I would say things like, okay, whenever the market breaks this line, I could consider entering again. Keep it in mind that it's an uptrend. This is a bullish trend because it has already reversed. So whatever you're doing in this market at this moment, whenever it breaks this line or it goes through this line, has to be a buy. Then you now start looking for your bearish order block that gives you access to the bullish trend. So guys, don't be confused. We're going to talk about other blocks in the next video, so I wouldn't want you to be confused. Let's just go to another. Okay, this is VIX 25. Look at this. The market has been consolidating for, let's see, this is just crazy, man. Don't just, if the market is doing something you don't understand, just leave it, go to another pair. Or you could, if that's the pair you like or the pair you like, just wait, you know, it's going to do something you like at some point. Let's go down. No, I want to show you that the market is actually consolidating. Let's go. This is too, okay. As you can see, the market is actually consolidating. Let's go to 4 hours. Okay, look at this, guys. Look at this. Oh shit. Look at this. This is a very strong consolidation. Are you seeing this? We don't trade this, but people trade this. People are good at this. So if you're a person, or you're the kind of person that trades consolidations, this is a perfect market for you to enter. but I don't enter this kind of markets, I'm gonna blow my account. So yeah, before it started consolidating, see what it was doing. It was on a downtrend, then it reversed, then it started consolidating. So you have to wait for it to either break this, which I know it's gonna do, or break this before you can start considering this market again. So guys, you need to learn how to be patient when you're trading, because that's one art that people need to understand. It's not just about having the knowledge, you also need to learn how to wait for the market to also fall into your strategy. Because if you see, even if you know that, okay, fine, this trend is going to go, like for instance, look at this. This is a very strong impulse move. Sometimes I actually know that, okay, fine, this thing is actually going to happen, and at least stop somewhere here. But I wouldn't enter this market. Why? Because this is not my strategy. I do not trade consolidations. Okay, so you need to know where your strengths are and use it as a tool to fight your wars. So let's recap a little bit. So guys, you go to your chart, you identify the general trend of the market. If it's on a bearish candle, if it's on a bearish trend, how do you know? It keeps on forming lower lows, lower highs, 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 lower lows. Then you go and identify your source or your breakers responsible for the uptrend or responsible for the downtrend. Then you wait for the retest of the source or the breaker, then you enter your trade and you make your money. So guys, that's that for today, and next time we're going to be talking about the order block strategy and how to identify your source and breaker. So guys, don't forget to like, subscribe, and push the notification bell. Okay, I'll see you in my next video, and hopefully I'm gonna show my face. Okay, bye guys.